This video is brought to you by Tendies. Browse Wall Street Bets and its sister subs with no ads or live streams of some clearance rack cam girl petting her cat. For a little while, Wall Street Bets was on a steep decline. Throughout most of 2021, our favorite sub no longer treated us to absurd but climactic trades. Instead, all the loss porn was Clove. All the gains porn was GameStop having a good day before the following day's decline. But we have since crawled out of that gutter, returning to our old degenerate ways. Wall Street Bets culture has proven itself infectious once again. I am captivated by the story of Impossible Ask 4646, a Mexican 26-year-old married father who eagerly awaits his green card. Meanwhile, he's been putting in 100+ hour work weeks on a farm through his work visa for over a year. But at a rate of $38 an hour, these extensive work weeks paid handsomely, tallying over $200,000 a year. As a means of making sure his family would never starve, Impossible Ask took on yet additional work flipping used Bitcoin mining equipment on secondary markets. As if this weren't enough labor already, our man found a near infinite money cheat code to multiply his stack even further through the use of the stock market and cryptocurrency. Throughout most of 2021, His Majesty identified garbage stocks that were trading at too high a valuation, things like Rivian, IronNet, and at least according to him, Riot Blockchain. He shorted these stocks after their huge runs up, which put cash value straight into his account. When most people short stocks, they just sit on the cash until they buy it back later and keep the difference. But that wasn't good enough for Impossible Ask. Why have $100,000 in cash from shorting Riot just sitting in your account? You can put that money to work. The farmer realized that he can withdraw this money immediately after shorting the stock, and then reinvest into various DeFi farms, that's decentralized finance, to receive more than 60% interest on this money. It's that simple. Open a margin account, short shares to receive cash, move said cash to a crypto farm, and collect interest while you wait for the stock to drop. Will that require the use of extensive margin and leverage? Yes. But you haven't lived until you've maximized your margin allowance to short meme stocks during a bull market. If that sounds like it's outside of your personal risk tolerance, you must have a fragile constitution, because Impossible Ask swore by it for the better part of the year. However, this is also a complicated maneuver. You have to keep a regular broker happy, and even if you're leveraged to the tits, any reputable broker will limit your borrowing capacity. Fortunately, our man found a workaround. An exchange called Mirror Protocol. Mirror is an innovative exchange that aims to make it easier to invest in the US stock market through the use of cryptocurrency. To do so, Mirror Protocol creates synthetic assets that mirror the price of a US stock. So if Starbucks stock is trading for $100, the Mirror Protocol's MSBUX synthetic stock will likewise trade for $100. Although buying actual Starbucks stock means you have to have a proper brokerage in normal US dollars, buying MSBUX only requires that you have some stablecoins and an internet connection, even if you live in North Korea and wouldn't normally be able to trade US equities. Even better, if you short MSBUX, you'll receive stablecoin that you can immediately stake in Mirror Protocol itself to receive high interest rates above 60%. From Impossible Ask's point of view, this was the golden ticket. Jacked up on leverage on both a normal broker and the Mirror Protocol, he would receive extensive passive income. Our man restructured his approach for this new method. He first took his earned income from farming and Bitcoin mining equipment resale, a stack of around $300,000, and bought $1 million worth of SPY shares on his normal broker with the use of portfolio margin. Then he took virtually all of his market gains from 2021, also coincidentally around $300,000, and dumped it into Mirror Protocol to short synthetic SPY asset MSPY. He then took the stablecoin he received from shorting MSPY and used it as collateral to short further, creating a huge loop until he was short $1 million of MSPY shares, at which point he reached his personal risk tolerance. According to Impossible Ask, he was so heavily leveraged on his short position that he sometimes needed to perform account maintenance multiple times per day so as not to wind up short of acceptable collateral limits. This big holding of cash from shorting MSPY immediately went into staking crypto on the Mirror Protocol platform, promising staking rewards of 60+% of his cash balance. With a $1 million long SPY position on his regular broker and $1 million short MSPY position on Mirror, Impossible Ask expected to be unaffected by SPY's movements, but he would continue to collect dividend freely as MSPY does not force the short seller to pay dividends as with normal shares. What could be better? Green card or no green card? Impossible Ask's life was about to turn the corner. No more 14-hour days of harvesting carrots and lettuce, just 60% yield on a multi-million-dollar passive income stream. Next stop, a one-way ticket to Ibiza to crush Mai Tais with Las Muchachas Pobrecitas. And that's when things got ugly. You see, the Mirror Protocol exchange does not have a direct line to Wall Street. Alone, Mirror doesn't know what SPY's current price is, so it doesn't know how to price mSPY without some help. To get a constant stream of data from an actual US exchange, Mirror integrated with Band Protocol, a crypto instrument that links real-world data to facilitate smart contracts on crypto exchanges. As long as the Band Protocol's bot called Band Oracle functioned correctly, the Oracle would feed data from Wall Street to Mirror, so Mirror could price its synthetic assets efficiently. But that's an impossible ask. On January 3rd, SPY started pre-market trading at around $477. Therefore, mSPY should have likewise been trading for $477. But something went amiss. After the market closed, some naive trader, probably a Wall Street Bets stray experimenting with this exotic financial instrument called shares, bought SPY at $496. For less than 1 second, SPY was legitimately priced at $496 before reverting back to its actual valuation. The Oracle fed this split-second price to Mirror, jacking up mSPY's price to over $496. Since Impossible Ask was already so close to exceeding margin allowance, this momentary 4% jump in price exceeded his collateral requirements and automatically triggered account liquidation. When someone exceeds margin allowance on Mirror, it doesn't happen as a regular margin call. Mirror auctions off the trader's assets to any available bidder until the account comes back into compliance. The auctioning process, as you might imagine, has been arbitraged to the point where bots do all of the bidding, and liquidation is complete in less than a second, often at really steep discounts. Really steep discounts. Mirror immediately liquidated the farmer's short mSPY position. Auction bots gobbled up the position in that single moment. The Oracle's technical error, this glitch in the matrix, cost our man his entire initial investment of $300,000. 3,000 bands, gone in 1 second. To make matters worse, Impossible Ask had a $1 million long SPY position on his regular broker, also with massive leverage. If you've been paying attention to the market this year, you'd know that position must be taking long pipe. Plus, he still had 2021 capital gains tax to pay. That's if people on work visas actually pay capital gains tax. Impossible Ask himself owns quite a bit of Mirror's governance token. He proposed that the crypto community reimburse him for his losses, but this proposal was rejected by a ratio of about 10 to 1. He then came back a second time and asked for reimbursement of at least his transaction fees, but this was also rejected by the community. Users on Mirror's forum are generally in agreement that this is not how Oracle should work, but it is indeed exactly how it was designed to work. Although everyone wants the issue fixed, users are in disagreement on whether people who got screwed deserve money back. But Impossible Ask has few other places to turn. Crypto assets synthetically mirroring the price of US equities are simply not FDIC insured. You could say Impossible Ask did this to himself, but if Mirror worked as intended, he'd already be chilling out on his 60% yield plus SPY dividend. The fatal error that burned this hardworking farmer was his excessive confidence in the stability of Mirror Protocol, and that overconfidence immediately evaporated when liquidation bots sold his mSPY to each other at a steep discount. I told him about Tasty Trade in covered calls, and offered to welcome him into Theta Gang as a refugee, but he was not interested. Our man is clearly being overly dramatic when he says his life is completely fucked after his wife left him. Still, this is a really shitty situation, and I know the next 18 months of shoveling cow pie is only going to be more painful since just replenishing the $300,000 that was hijacked from him, not to mention the 60% interest he could have been earning on it. So the next 24 months of grinding barley is basically being done for free, all on account of this half-second technical issue, and the guy who bought SPY at $496. But you know what they say about farming building character. My friend, welcome to America. My offer to welcome you into Theta Gang under refugee status is still open. See the link to our free Discord in the description. Whether you decide to get on board or not, please accept this crown and take your place on the throne of degeneracy.
Who wants to be king?
Ladies and gentlemen, I hope you enjoyed watching this farmer get his silo blown open. Don't let his sacrifice be in vain. Trade responsibly. See you next time.